Sir, very happy morning to all.
Happy morning, sir.
Sir, we are moving into the part 3 of computation of GST payable. In that we are going to do question number 1, question number 2 and question number 3. Basically illustration number 7, 8 and 9. I am starting with illustration number 7. According to me, illustration number 7 is a very good question. In the sense means a lot of good adjustments are there. They are connecting at various places. A good integrated question has been asked. The details of transaction of J Limited, Vadodara, Gujarat, a registered taxable person during the month of February are as under. The important takeaways are the assessee's name is J Limited. They are in Vadodara, Gujarat. Leave Vadodara, take Gujarat, and this is for the month of February. These are the key takings. Purchased goods from manufacturer in Maharashtra. They have purchased goods from a person in Maharashtra. So the supplier is situated in Maharashtra and the recipient is situated in Gujarat. As a merchant exporter, our guy J Limited is going to export the goods. As a merchant exporter, on payment of 0.1% IGST, yes, since it is an interstate supply, IGST has to be paid by our person J Limited, and exported the same directly to an importer of Spain under LUT. Basically, after purchasing the goods by J Limited, our assessee under merchant exporter scheme, they paid only 0.1% IGST and they have completed the export under LUT. Since it is LUT, there is no output tax collected. Since there is no output tax collected, that 0.1% paid will be accumulated ITC, accumulated GST, that can be claimed as ITC. That can be claimed as. Since that amount has been paid by J Limited Vadodara, sir, the supplier who are situated in Maharashtra cannot get it as refund. There are two options are there. Either the supplier can pay that 0.1% and complete the supply. If that is the case, the supplier can claim it as refund. Otherwise, it can be collected from the recipient. Sir, our assessee is J Limited recipient. If that is the case, J Limited is having two options. Either he can complete the export on payment of what? IGST or LUT. But this is merchant exporter case. This is possible under LUT option. They have completed the export under LUT. So no output tax will be there. So whatever amount they have paid at the time of purchase of the asset, which is 0.1%, is eligible to claim as ITC. FOB value is 7 lakhs. Fine. The export value free on board is 7 lakh. They have not given the purchase value. They have given only the FOB value. FOB value means export price is how much lakh? 7 lakh. Invoice for the supply to J Limited was received on 5/2 that, and the payment was made on 8/2. That means our company J Limited is having a valid tax possession of valid tax paying invoice. So they are entitled to take, and they have made the payment on 8/12. So proviso 180 days confusions will not come. That means our assessee is pakka entitled to take ITC. My question to you is whether this adjustment will go in the ITC computation or output tax collector computation. ITC computation. So computation of admissible ITC for the month of February 2022. Goods purchased as merchant exporter. Merchant exporter is eligible to take what? ITC of IGST paid of how much percent? Sir, in the absence of value of supply of goods purchased. Yes, sir. Actually, that has not been given in the question. Purchase value to our assessee has not been given in the question. As a merchant exporter, FOB value of the export of such goods has been taken as their what price? For computing the ITC amount. Because there is no other way. We can't take the purchase price. Purchase price is not given in the question. So the export price into 0.1%, 7 lakhs into 0.1%, 700 can be taken as ITC. Shall I proceed to the next adjustment? Adjustment number 2. Imported goods from China. Sir, instead of purchases from locally, our guy has imported goods from China with SIF value of how much? 5 lakh. When you are exporting, you are supposed to see the FOB value. When you are importing, in customs valuation we have studied, it is SIF value, cost, insurance, and the goods were sold for 5,10,000 as high C sales to an Indian party on 21/2/2022. Sir, as per schedule 3, negative list, if the import of goods has been sold in high C sales, it will neither be treated as supply of goods nor be treated as. So for this, there is no question of ITC at all, and you are not supposed to collect the output tax also. But this goods has been sold to an Indian party. Now that goods has been in the hands of the Indian party. What he is doing matter. Whether he is bringing and putting in customs warehouse, or whether he is bringing inside India for home consumption, or he is again going to export, or he is going to again sell in high seas, that the tax implications will be applicable in his hands. Applicable, sir. So you tell me, imported goods from China with SIF value of 5 lakh, the goods were sold for rupees 5,10,000 as high C sales to an Indian party. This will neither be treated as supply of goods nor be treated as supply of services. Right. And no IGST implication has been given. Since no IGST implication has been given on import, there is no question of what at all, ITC at all. So this will not reflect in the ITC computation and also in the output tax computation. So if you see goods imported from China, no ITC, since no tax is not payable. In case of IC sales, IGST is paid by the last IC sales buyer who filed the bill of entry for what consumption. Now the goods is with some other Indian person. He is going to import the goods into India. That guy only will file the what of entry? Bill of entry. So that guy will only pay the basic custom duty, SWS, put together various other types of custom duty, and finally what SC? On a value determined under section 3 subsection 7. Right? So for that importer, he can take that IGST as ITC. Now we have passed on the goods to some other person. So for us, there is no question of ITC at all. So, sir, no ITC is available. Comfortable, sir? Since this is neither supply of goods nor supply of services, no need to collect what also? Output tax also. So in output tax collection calculation also, it will not come. That is goods imported. Sir, I see sales of goods imported from where? China. Neither treated as supply of goods nor as supply of services. This is covered in Schedule 3. A stands for actionable claim other than specified actionable claim. B stands for bridge. C stands for cap. D stands for right. B stands for what? Board. C stands for court. D stands for district court. E stands for employer-employee relationship. F stands for funeral. G stands for ground. H stands for holds of possession. And also, my dear lovable students, there are 3 entries relating to goods. Sir, if you purchase goods from outside India, selling goods outside India, it's not a supply in India. If you are selling the goods in high seas, not a supply in India. If you are selling the goods in customs bonded warehouse, it is not a supply in India. So since this is not supply of goods nor supply of services, sir, there is no need to collect output tax. Shall I, sir, move into adjustment number 3? Yes, purchase goods from a party in Taiwan. Taiwan is in India, outside India? Outside India. Again import, they are talking. Sold the goods to a party in Turkey without bringing the goods to India. This is again an item covered in purchase value was how much lakh? 5 lakh. And the sale price was how much? 7 lakh. So this is not liable to tax in India. But J Limited is our assessee, no? Paid sales commission of 50,000 to Mrs. T, their agent, in connection with this transaction. The transaction was completed in the 3rd week of February. Our month is February, no? The figures in rupees have been given. After conversion though, transaction was convertible in what currency? Foreign currency. So, you have to there are two transactions has been clubbed. Number one, supply of goods which is purchased from outside India and sold outside India is neither supply of goods nor supply of services in India. So no need to collect output tax. No need to collect. Since those goods has not reached the landmass to India, you would have not paid the IGST at all as per 3.7. So there is no question of taking what at all, ITC at all. So it will not come in ITC computation and also in the output tax calculation computation. Comfortable? But second one is something different. Sales commission paid by our company to an agent. Sir, to an agent means service provider is situated outside India and the service recipient is situated in India. We are the service recipient. So provisions of section 12 for place of supply will not be applicable. Provisions of section 13 will be applicable. And they specifically said that 13 subsection 9 intermediary services, agent services. Are you remembering that 3 services are there? Number one, service provided by the banking company or financial institution to its account holders. Number 2, in between, intermediary services. And the last one, third one, hiring of means of transport, excluding aircraft and vessel, including yachts up to a period of 1 month. So 13 subsection 9 provisions will be applicable. In that, 13 subsection 8 provisions will be applicable. In that, in between the intermediary services, place of supply is the location of the supplier. That is the place of supply. Place of supply is the location of the supplier. So the location of the supplier is situated outside India. So the place of supply is outside India. If the place of supply is outside India, it is not liable to tax in India. Hence, even for that commission also, you are not liable to pay or collect any GST. So this is Taiwan transaction. I am coming to Taiwan. Goods purchased from Taiwan. No ITC. Since tax is not payable as goods do not become part of landmass of the country. So I have not paid any amount as tax at all. If I pay something only, there is a question of claiming ITC because it is neither supply of goods nor supply of. So there is no question of ITC at all. This is the first transaction. Number 2, sales commission paid to agent Mrs. T. Where Mrs. T is situated? They are situated. Since service provider Mrs. T is an intermediary in the given transaction, place of supply is the location of the Mrs. T. That is where? Outside India. The tax is not payable under what charge? Reverse charge on said services. There is no question of RCM at all. The service provider is situated outside India and service recipient is situated in India. We know that once you import a services, the person who are situated in the taxable territory is the person liable to pay tax on reverse charge. But the place of supply for this service is where? Outside India. Hence it is not at all taxable in India. Then there is no question arises for who is the person liable to pay GST. If there is no who is the person liable for GST, RCM provisions will not be. Since a transaction was undertaken in convertible what exchange, it is logical to infer that Mrs. T is located outside India. So the supplier is situated outside India. So there is no ITC and all. For even for this transaction for 50,000 there is no ITC. So first of all, for goods purchased from Taiwan and sold outside India, it is neither supply of goods nor supply of services. Hence I would have not paid GST. So there is no question of ITC. Next one, sales commission paid to agent Mrs. T. Sir, for that the place of supply is situated outside India. Hence it is not taxable in India. Hence RCM will not be applicable. Because FCM will not be applicable, FCM will be applicable only for OIDAR services. That too if they provided to a non-taxable online recipient. For all other things, as per 5.3, are you remembering? As per 5.3, the person located in India is the person liable to pay tax on reverse charge basis. Comfortable, sir? Okay, sir. Sir, even for this, no need to collect any what tax also, output tax also. Goods purchased from Taiwan, sold in Turkey without bringing into India, neither treated as supply of goods nor as supply of services. Comfortable, sir?
Yes, sir.
No need to collect any, sir, tax. I am coming to adjustment number 4. Shall we?
Yes, sir.
J Limited has agreed to provide. Who's J Limited? Our person. Assessee. Agreed to provide technical services to Mr. K. Ahmedabad, who is an unregistered person in connection with manufacturing operation to be undertaken by him for a consideration of how much lakh? 5 lakh. 5 lakh. And has received an advance of 1 lakh for the same on 2/2/2022. My dear lovable students, sir, we are going to provide a supply services. We said that, sir, we are the service provider and some other person is a service recipient, but the service recipient is an unregistered person. Let it be. Let him be unregistered person. Sir, we are to collect what? GST. He gave an advance of how much lakh? 1 lakh for services, not for the goods. Hence, notification number 66/2017 will not be applicable. Will not be applicable. Sir, time of supply will be either the date of invoice or date of payment, whichever is earlier. Whichever is. So, for this 1 lakh, now itself we are supposed to collect what? GST. So, this will form part of ITC computation or output tax liability computation. Output tax liability computation. Hence, I am coming to output tax liability computation. Advance received for technical service to be provided to Mr. K. Tax on service to be provided is payable at the time of receipt of advance. Notification number 66/2017 will not be. So 1 lakh. So 1 lakh into 9%, 9,000, and again 1 lakh into 9%, 9,000. I am not treating that advance 1 lakh as inclusive of GST. I am assuming that on that advance I have collected output tax of 9% and an alternate assumption is also possible because I received only an advance of how much lakh? 1 lakh. As per rule number 35 of the valuation rules, I can treat that as inclusive of GST. I can reverse work also 1 lakh divided by 118 into 18. I will get the CGST. Divided by 2, I will get the CGST and SGST. Comfortable, sir? Yes, sir. I'm moving into the adjustment number 5. Shall I? Yes, sir. It has imported raw material. Again, they are importing from China. SIF value of goods for the purpose of customs included rupees how much? 1 lakh as ocean freight paid by our company limited, J Limited. The value for the purpose of levy of IGST worked out by customs was how much lakh? 6 lakh. That means this is the value as per 3 subsection 7. On this only you are going to pay what? IGST. Whatever amount you paid as IGST can be taken as ITC. Clearance for goods taken place on 4/2. 4/2 means our month, which is February. Then you are entitled to take what? ITC. So on this 6 lakh, you would have paid IGST at the rate of how much percent? How much percent? CGST 9%, SGST 9% and IGST 18%. So will this form part of ITC computation or output tax collected computation? ITC computation. So I am coming to ITC computation. Imported raw material from China. Input tax inter alia includes IGST charge on what of goods? Assumption. It has been assumed that contract for import of goods from China is on what basis? And that SIF, cost, insurance and freight. Sir, after SIF everything calculated, 6 lakh rupees is the value. They themselves given in the question. We will not pay CGST and SGST. We will pay what? IGST. 6 lakh into 18%, 1 lakh. And that can be taken as what? ITC. Here there is no question of output tax collected. When you sell that in future only, question of output tax collected arises. Are you able to place the things? Yes, I'm moving into, sir, question adjustment number 6. Locally purchased taxable raw material. First time, it's not import. Sir, indigenous purchase. Stored in the factory, got spoiled, blocked credit, due to rainwater in the factory and become unusable. That means you are not entitled to take what? ITC. If you have already taken ITC, that has to be reversed by way of adding to the output tax liability. If this month only you have purchased, don't take ITC. Concept clear? So when you purchase matters a lot, that date matters a lot. J Limited claimed and received an insurance amount of how much? 60,000 for the same. So So for this amount, 60,000 rupees who have given? Insurance company have given. That means they have taken one insurance. After they taken insurance, sir, water came, rainwater came, raw material got destroyed. Right? For that the insurance company gave a compensation. Compensation. So one action happened. Rainwater came. That is the action. Because of that action, which action? Rainwater came. Hello sir. Yes, my raw material swaha. Yes, so that raw material cost has to be reimbursed by the insurance company. So I am going to claim that amount from the insurance company. So there is an actionable claim. Actionable claim are goods, but it is covered in Schedule 3. Neither supply of goods nor supply of services. Because of that, this 60,000 GST implication will not come. Are you able to appreciate and understand what I am talking about? Okay, sir? Because if you see Schedule 3 negative list, hello sir, actionable claim, all actionable claims are covered in Schedule 3 other than not lottery betting gambling, specified actionable claim, because now the list has become more. Specified actionable claim are lottery betting gambling, casinos, horse racing and online money gaming. So there is no, because of that there is no consequences for 60,000. No RCM, no FCM, neither supply of goods nor supply of services. This is covered in Schedule 3. What an adjustment. Fantastic to the core. Value of raw material at the time of receipt is how much? 70,000. That means the cost is 70,000. Raw material was purchased from a party in Gujarat on 3/2 and payment was made on 7/2. That means you have not taken what? ITC. Don't take ITC now. If you would have taken what? ITC. Reversal. Either you have to reverse through electronic cash ledger or you have to add it to the, since this is a transaction in the current month, my dear lovable students, don't take the ITC. So will this affect the ITC computation or the output tax? In ITC you have to write and you have to put a dash. Raw material spoiled. ITC is blocked under 17 subsection 5 on destroyed goods. Insurance amount received is a dash claim. Very good sir. Because of one action we are claiming from someone. That's why lottery is also actionable claim. Because once you won the lottery, that's action. So based on that winning, you are claiming an amount. Correct? Yes sir. Thus it is treated neither as supply of goods nor supply of what? Services. So I have not taken ITC. You are not supposed to take ITC. Since the transaction is relating to the current month, my dear lovable students, don't take ITC. And this will not come in the output tax liability. Question number, adjustment number 7. Shall we move into adjustment number 7? Yes, sir. Company purchased a 3-wheeler auto rickshaw, 3-wheeler motor vehicle. We are having a definition of motor vehicle in the block credit. M stands for motor vehicle. Up to how much cc? 25 cc will not be treated as what vehicle? Having capacity of 2%, sir, which is less than 12 capacity, including driver. Including what? Driver. That means it's like Dhanush moped. One film is there, no? V8. Velailla Patadari. Sir, Dhanush is purchasing one moped. Correct? That moped only they are discussing. 2%. Including driver. Right. In one more Vijay Sethupathi film also that is coming. Nayanthara. Kadu ke kadu. Nanu Raudina. Including driver, engine capacity is 20 cc. If in the same speed, if you are able to revise the provision of 20 cc at a cost of 2,50,000. Oh my God. Moped is costing 2,50,000. But the engine capacity is only 20 cc, which is being used for transportation of staff of company from residence to factory and back. In that moped, no, driver is asking the staff, sit down ma'am. And they are taking back. The vehicle was received on 5/2 and payment was made on the what date? Same day. You tell me, is this a motor vehicle? Not a motor vehicle. Hence, since this is not a motor vehicle, ITC is eligible. You can take what? 3-wheeler purchase. ITC on 3-wheeler. which engine capacity up to 20 cc is allowed as it is not a motor vehicle and used in the course or furtherance of business. So 2,50,000 into 9% come to 22,500 CGST. 2,50,000 into 9% come to 22,500 CGST. Read that line once again. Company purchased a three-wheeler having seating capacity of 2%, including driver, engine capacity 20 cc at a cost of, which is being used for transportation of staff of company from residence to factory and back. Vehicle was received on 5/2/2022 and payment was made on the same date. But the question did not mention from whom they have purchased, whether it is an intrastate supply or interstate supply. But we have assumed that the supply is a, that's what they have written as assumption number 1. It has been assumed that purchase of three-wheeler is a dash state supply. Alternatively, it is possible to assume that purchase of three-wheeler is a, in that case, IGST of 45,000, that is put together 22,500 and 22,500 will be available as what? ITC. Comfortable, sir? Assumption number 2, this is just to show the examiner that, sir, I have studied very well indirect tax. It has been assumed that depreciation has not been claimed on the what component? On the said capital goods under the Income Tax Act. Like that, you can have another 5-6 assumption also. Right, fine. It's not much valid, but still okay, fine. They have written, I have read it. Shall we move to adjustment number 8? It has paid inward transportation expenses of 30,000. So they paid 30,000 to Mr. Z, a Tembo owner, who is not issued any consignment note. If you issue consignment note, you will be called it as GTA. If you don't issue consignment note, who will not be treated as GTA. So you are not GTA. Not courier agency. Because in order to be courier agency, there should be time sensitive documents. Right? If it is not GTA, don't assume that everyone is courier agency. Right, sir? He has issued a consolidated bill only on 3/2/2022 our month and payment was made on 4/2. Sir, transportation of goods by road except GTA and courier agency are exempt from GST. This is transportation of goods by road. They are not GTA, they are not courier agency. Hence, the service is exempt from GST. Since the service is exempt from GST, no need to pay any tax. Since no tax, there is no question of ITC, inward transportation from Mr. Z. Services of transportation of goods without issue of what note? Consignment note is not covered under the service of what? GTA, and hence what? Exempt. Thus, no ITC is available. You would have not paid any tax, then where is the question of claiming ITC? Because that service itself is exempted. Comfortable, sir? You read if you want, you read once again. It has paid inward transportation expense of 30,000 to Mr. Sept, a Tembo owner. Sir, please don't ask me a doubt that, sir, where in the question it has given that by road, then Tembo will fly here. Then Tembo will go in water. Tembo means it will be what? Road only. Who has not issued any consignment note, that means they are not GTA. They are not GTA. That is the difference between GTA and courier agency. Courier agency will use any means of transport to transport the goods. It is not only by road. They may air also, water also. I have specifically given the difference between the GTA and courier agency in G stands for goods transport agency and what? Courier agency. Goods and GTA we have discussed. I am coming to the next adjustment, man. Adjustment number 9. It has supplied goods of value of 50 lakh to V Limited, Rudra, Gujarat, including rupees 10 lakh supplied to SEZ unit of V Limited. Sir, if you are supplying to an SEZ unit, it is zero rated supply. Already this company is having a history of supplying under LUT option. So, we can assume that they will not go to the payment of GST, IGST option. So, for this 10 lakh, sir, 50 lakhs class 1 2 category, 40 lakhs and 10 lakh. For this 10 lakh, what will not come? GST will not come. Because they would have exported to SEZ under LUT option. But for that 40 lakh, sir, our guy is situated in Gujarat and Rudra also situated in Gujarat. It's a dash state supply. So 40 lakhs into 9% CGST and 40 lakhs into 9% SGST is the tax collector to be collected. You tell me, will this affect the ITC calculation table or output tax calculation table? So I am moving into output tax calculation table. Goods supplied to SEZ unit of V Limited. Supply to SEZ is a zero rated supply. It has been assumed that goods have been supplied to SEZ without payment of tax. It's an assumption. From where you got that assumption? Because the company is having the history of doing or regular pattern of doing exporting the goods outside India under LUT option. So for this 10 lakh, they are not supposed to collect any GST. Whereas supply of goods to V Limited Gujarat, the remaining 50 lakhs minus 10 lakh, 40 lakhs will come. 40 lakhs into 9% come to 3 lakh 60,000. 40 lakh into 9% come to 3 lakh 60,000. My dear lovable students, is it easy? Shall I move to adjustment number 10? It has purchased goods from X Impex Limited. From someone they have purchased. Khadi Gujarat. For use as raw material. In its factory, they purchase some raw material, man. Basic, man. The value of goods is 30 lakh. Invoice dated 2/2. You tell me, will this affect the ITC computation or output tax computation? ITC. This can be taken as ITC because this is an eligible input. So how much lakhs into? 30 lakhs into 9% CGST and 30 lakhs into raw material purchase from X Impex Limited Gujarat. ITC on goods used in the course of furtherance of business is allowed. 30 lakhs into 9%, 2 lakh 70,000. 30 lakh into 9% come to 2 lakh 70,000. IGST will not come. Comfortable, sir. It has availed means received. Sir, supply of manpower security services from Y Limited. That means supplier is a body corporate. If security services has been provided by a body corporate, FCM will be applicable. If a non-body corporate is provided to a body corporate, RCM may be applicable. Vadodara, Gujarat, a registered what person? Registered taxable person. The amount paid is 1 lakh. The invoice was received on 1/2 and payment was made on the same date. So for this 1 lakh, we would have paid GST. He would have collected GST under FCM. So this will reflect in ITC computation or output tax computation. Manpower security services from Y Limited. Since security services are provided by a body corporate, tax on the same is not payable under what charge? Reverse charge. So this would have traveled through forward charge. 1 lakh into 9%, 9,000. 1 lakh into 9%, 9,000. Total comes to how much lakh? 1 lakh. Are you really with me? Total value is 1 lakh. We have read all the adjustment, man. Assume the CGST and SGST rate to be 9% each and IGST to be 18. Except the supply received as what exporter? Kandipa. For merchant exporter, they would have collected tax at point. Ignore compensation cess. Compensation cess. Ignore. J Limited had an opening balance of ITC of CGST of 20,000 and SGST of 20,000 as on 1/2/2022. This should come in the opening balance of ITC in the ITC computation table. That's what here they have given. Opening balance CGST 20,000, SGST 20,000. There is no opening balance of. In respect of all the inward supply, suppliers have uploaded their invoice, good boys. In respect of their GSTR1, that means suppliers have filed their GSTR1 outward supply properly and supplies are reflected in GSTR2A and 2B. If it is reflected in GSTR2A, 2B only, we are entitled to take. All the figures given above are exclusive of GST wherever applicable. Work out the admissible ITC. That's what we have done in table number 1. And GST liability, which is CGST, SGST or IGST. So we have to finalize the output tax collected. From that we have to knock off the ITC. We have to find out what is the GST payable. As the case may be payable in cash by J Limited Vadodara, Gujarat for February, ensure that all the items in table are covered in your answer. That means even though if it is nil, you have to write and put a nil and you have to what? Give the reason. That's what they are mentioning. Provide supporting explanatory notes for your conclusion wherever required. So shall we finalize one by one? Yes, sir. We have, sir, for every adjustment of output tax we have done. So the total output tax comes to, sir, 3,69,000 CGST and 3,69,000 SGST. Once we finalize the ITC part, man, this is the total ITC we have done with everything. Sir, 3,21,500 CGST, 3,21,500 SGST, 1,08,700 of IGST. So shall we finalize the computation of GST payable, output tax collected minus ITC. Just now we have done the ITC. First we know that we have to exhaust the IGST. So take 1,08,700. So take that 1,08,700. You can knock off, sir, is there any IGST payable? There is no IGST payable. Hence you can knock off that against CGST and SGST in any manner and any proportion. So they have set up as half and half. So what is the amount? 1,08,700. divided by 2, what you are getting? 54,350 they have knocked off against CGST, 54,350 they have knocked off against IGST. Sir, credit of IGST can be utilized towards payment of CGST and SGST liability in any order, and in credit of CGST and SGST can be utilized only after IGST. Sir, credit has been fully. Thereafter, credit of CGST and SGST is utilized for the payment of what? And SGST liability respectively. CGST credit cannot be utilized for payment of SGST and what was up. They have written that in NSR rule. What is the next credit available? 3,21,500 of what and what? CGST and SGST. So you tell me, sir, what is the total? 3,69,000. From 3,69,000, you already knock off 54,000. What 50? 350. So 3,69,000 minus 54,350 means 3,14,650 is only payable. We are having sufficient respective credit are there. 3,21,500 and 3,21,000. So from 3,21,500 we will utilize 3,14,650 of CGST. From 3,21,500 SGST credit, we will utilize 3,14,650 of SGST. There is no CGST payable, there is no SGST payable, there is no IGST payable. Actually, in fact, we are having what forward only? Carry forward only. We have to carry forward CGST credit and what? SGST credit. To the extent of how much? 6,850 has to be carried forward. 6,850 has to be carried forward. This will become 0. And GST payable on inward supply. Imported raw material from China. Sir, we have to pay the IGST. We have to pay the what? IGST, because this has not been included here. Correct? In the output tax what? Payable. So for that 6 lakh into how much percent? 18% comes to 1 lakh. 8,000, but this we have already included in the ITC computation. This we have taken as ITC. Once you pay it as output tax only, you can take it as ITC. No, this is not coming under the GST calculation table. This is coming under the customs part. So we are manually adding. So the total net GST payable in cash is 1,08,000 of IGST. Why IGST? Interstate supply. Import is a interstate supply. ITC of IGST can be utilized towards payment of CGST and SGST in any proportion, and in. Therefore, there can be multiple ways of setting off of IGST credit against CGST and SGST. However, total amount of net GST payable in cash will be same in all the cases. Comfortable, sir? Yes, sir. What we have done is, we have done a super question past examination, November 22 question. By this, we have completed in part number 3. The first question number A, comes to an end. I hope that you are believing, man. Have a quick revision of first question. Then we'll be doing, sir, illustration number 8 and illustration number 9, and we'll be completing this part. Sir, very, very, very happy evening to all. Sir, we are doing computation of GST payable. Actually, in that, we have done set number 1. Question number 1, 2, 3. Set number 2, question number 4, 5, 6. We are in question part number 3, which is question number 7, 8, 9. 7th question we have solved. I'm moving into question number 8, which is a very easy question. Mr. NY, a supplier of goods, pays GST under regular scheme. That means he is not traveling through composition levy. That means he is traveling through section 9 route, he is not traveling through section. Mr. NY is not eligible for any threshold exemption. He has made the following outward supply during September 2017. Very simple, man. Straight away outward supply has been given. Intra-state supply of goods. You are supposed to collect CGST and product A, 8 lakhs is the value, 6%, 6%. Very easy. 8 lakh into 6%. 8 lakh into 6%, you will get the output tax collected. Product B, 2 lakhs is the value of supply, 9%, 9%. So you can easily find out the output tax collected. This is interstate supply of goods with regard to product A. So with regard to product A, interstate supply, we are supposed to collect the IGST. So you tell me 6 plus 6 comes to That's why here it is 12 percentage. So 3 lakh into 12 percentage. 9 plus 9 comes to, that's why here it is 18 percentage. 1,50,000 into 18 percentage. By putting all this, you can easily calculate the output tax collected, right? He has also furnished the following information in respect of supplies received by him during September 2017. Intra-state supply of goods. The value of supply is 2 lakh. For this guy would have paid CGST and SGST, 6% CGST and 6% SGST. This can be taken as ITC. For product B, 9% and 9%. So 1 lakh into 9%, 9,000, and 1 lakh into 9%, 9,000. That's the intra-state value of purchases. Which is interstate, man? Tell me, 6 plus 6 comes to 12%. So 1,50,000 into 12% will be the IGST credit. And 9 plus 9% come to 18%. Sir, 80,000 into 18% will be the IGST credit for product B. For product B. Mr. NY has the following ITC with him at the beginning of September. CGST 40,000, SGST 28,000, and IGST 44,600. Both inward and outward supply are exclusive of taxes wherever applicable. All condition necessary for availing the ITC has been fulfilled. Compute net GST payable by Mr. NY for the month of September. Make suitable assumptions wherever required. This is a inter-level question. Nothing is there. They themselves given the sales details. They themselves given the output tax detail. They themselves given the purchase details. They themselves given the input tax paid details. Output tax collected minus input tax paid. We will get the net GST payable. So computation of net GST payable by Mr. NY. You tell me, intra-state supply of goods, product A. What is the value for intra-state? 8 lakh. So 8 lakh into how much percentage? 6%. 48,000 CGST they are supposed to collect, and 48,000 SGST they are supposed to collect. With regard to product B, again intra-state supply, 2 lakh into 9% comes to 18,000 CGST they are supposed to collect, and 18,000 SGST they are supposed to collect. Since it is intra-state supply, they won't collect the IGST. Very basic question. With regard to interstate supply of goods, my dear lovable students, for product A, the value is 3 lakh. Sir, 3 lakh into 12% comes to 36,000 is the IGST collected. And with regard to product B, 1,50,000 into 18% comes to 27,000 is the output tax collected, IGST collected. So total CGST collected is 66,000. Total SGST collected is 66,000, and total IGST collected is 63,000. Sir, they have purchased. So computation of total ITC available. Opening ITC already given in the question. CGST how much? 40,000. SGST 28,000, and IGST 44,600. Intra-state supply of goods, both product A and B is there. What is the purchase value? 2 lakh into how much percentage? Comes to 12,000 CGST they would have paid, and 12,000 SGST they would have paid. With regard to product B, 1 lakh into 9%, 9% comes to 9,000 CGST they would have paid, and 9,000 SGST they would have. Interstate, sir, supply of goods. They are having interstate purchase also. On that they would have paid what? IGST. What is the value of interstate? 1,50,000 into 12% comes to 18,000 from product A. And the second product, what is the purchase value? The purchase value is 80,000 into 18% comes to 14,400 from product B. This is with regard to product B. So the total input tax available, CGST credit is 61,000, and the SGST credit is 49,000, and IGST credit is 77,000. As per the ITC rules, first you have to exhaust the IGST payable, and balance you have to come to the CGST credit and also the SGST credit. So this is the computation of net GST payable from cash ledger. GST payable, CGST 66,000, SGST 66,000, IGST 63,000. This is the output tax collected. First take what credit?
IGST credit of 77,000. Sir, against that 77,000, knock off the 63,000. That means 77,000 minus 63 means still how much rupees is there? That 14,000 you can knock off in any manner or any proportion. In this question, they have set off against the SGST payable. No issues at all. Sir, now this will become 0 IGST payable. SGST payable from 66,000 collected. If we knock off IGST credit, 52,000 will be the payable. How much is the SGST credit available? 49,000. And here credit available is 60. So 66,000 minus 61,000. 5,000 is the net CGST payable. And sir, after knockoff of IGST credit, we are having 52,000 payable. From the 52,000 payable, knock off their own credit of 49,000. Sir, the net SGST payable will be 3,000. Are you comfortable, man? This is a very basic inter question, which is output tax collected minus input tax paid. Sir, but still I will tell you that writing practice should be there for examination. You have to at least solve once before examination, because this may be asked for 5 to 6 mark in exam. That 5 mark, 6 mark plays a major role. Sir, as you all know that we are doing computation of GST payable. In that, we are in set number 3. When I am doing set number 3, I read a question which has been asked in November 2019. So actually, there are certain prerequisites to solve this question. I'll read 1 or 2 lines, then I will do the prerequisite and I will come back to this question. Sukhdev is a mining engineer. He has crossed the threshold limit for registration under the GST law and is duly registered in the state of Maharashtra. He effects the following transaction in the month of March and want you to compute the tax payable in cash. He has filed bond or LUT to claim benefit from zero rated supply. Following are the particulars furnished by him. Point number 1. Question number 1. Sukhdev, being an operating member in mining and exploration services at Mumbai High, has provided certain services to the joint venture in which he is also a participant. So there is a joint venture. In that joint venture, Sukhdev is an operating member. He is provided certain services to that joint venture. As we all know that, as per section 7 subsection 1 clause AA, activities or transaction by any person other than an individual to its members, constituents or vice versa for cash, defer payment or other valuable consideration is a supply. That means Sukhdev has provided certain services to the joint venture. Member has provided certain services to the joint venture. That means it's a supply under section 7 subsection 1 clause AA. He believes that consideration received from the joint venture is cost petroleum and not taxable. So a new term we are coming forward called as cost petroleum. So through this question, I wish to make you understand what is cost petroleum and what is profit petroleum. So from this part, we are deviating to cost petroleum and profit petroleum. Fantastic to the core. So we are going to talk about cost petroleum and profit petroleum. As we all know that petroleum is the richest source of resource. Since petroleum is a part of natural resources, the owner of petroleum is the central government. Because it's a part of natural resources. But central government can't dig that petroleum. So what generally central government will do is, central government will set up an auction. Central government will set up an auction. And they will say that whoever are quoting the highest bid, central government will say that the right to explore or right to produce petroleum or natural gas, we will assign to you. So there will be one central government. They are having the mining rights. That right will be given to a company or a person who are quoting the highest bid. For example, central government is there and central government, sir, has given the license or the lease to a company which is a business entity called as X Limited. What rights they gave? They gave the right to explore or produce or petroleum or natural gas. From here onwards, this X Limited, we can call it as minor or OEPC, Oil Exploration and Production Contractor. So I am the central government. You are the OEPC or minor. You won the auction. The highest bid has been accepted. As a central government, I have given the license or lessor-lessee relationship, lease relationship to the minor or the OEPC, my dear lovable students. We all know that services provided by government or local authority to a business entity is taxable under reverse charge basis. So the person who are liable to pay tax is the OEPC or the minor because they got some service from the government. Fantastic to the core. For this, you are supposed to pay me consideration. What consideration you have to pay me? The consideration what you are supposed to pay me is a royalty. But this is a little different way of transaction. What central government is saying that we are not only satisfied with the fixed royalty, but also we want variable royalty. That variable royalty is based upon how much profit you are earning. So, in order to assign the right to explore or produce petroleum or natural gas, you have to pay as royalty. That is irrespective of the amount what you are digging, my dear lovable students. And you do your business. You got a right, for that you are paying some consideration. That is called as royalty. That is a fixed sum. For that you are liable to pay tax at RCM. There is no doubt about it. And you do your business. And after you do the business, sir, like this, a P&L account you prepare, which is nothing but, man, find out the profit petroleum. Find out the profit petroleum. What is profit petroleum? Which is nothing but the total value of petroleum produced in a particular year. For example, sir, they have produced, example I am saying, 1 lakh liters of petroleum, 1 lakh ton of petroleum, whatever it may be. Out of that, in order to produce that petroleum, they would have spent 5 crore or 10 crore or 20 crore as the case may be. Out of this 1 lakh liter of petroleum, if they sell 60,000 liter of petroleum, they can incur that cost. They can recover the cost incurred. So they have, sir, extracted 1 lakh liter of petroleum. Out of that 1 lakh liter, if they sell 60,000 liter of petroleum, they can recover the cost, whatever they have incurred. Then that 60,000 liter of petroleum is called as cost petroleum. That 60,000 to the level of 60,000, it is called as cost petroleum. And 1 lakh minus 60,000, 40,000 liter are there. That is called as profit petroleum. So what is profit petroleum? From the total value of petroleum produced in a year minus the cost petroleum. What is cost petroleum? Cost petroleum means the cost incurred by the OEPC for producing the petroleum. For producing the petroleum. So from the total sale value of the petroleum generated, if you reduce the cost petroleum, you will get the profit petroleum. What central government is saying that out of this profit petroleum, 40,000 liters, you gave us, sir, 25,000 liter. The balance 15,000 you keep. Or 50-50, 60-70, what 60-40, whatever it may be, my dear lovable students. So this is what happening. Now question arises, why out of that profit petroleum we have to share with the central government? It is because of PSC. Between the central government and this guy, which is, sir, business entity X Limited, who are located in taxable territory, shortly called as OEPC, already they would have entered into an agreement called as PSC agreement. In that PSC agreement, the government would have mentioned that in order to allocate the right to you, you are supposed to pay as the royalty, that is a fixed term. That is not exempted. That is taxable. at RCM, there is no doubt about it. But my dear lovable students, from the total sale value of petroleum, if you reduce the cost petroleum, you will get the remaining as profit petroleum. Of that profit petroleum, we can share in some proportion or some ratio. That proportion or that ratio will be predetermined in PSC. Now, what are the GST issues? This is the transaction what is happening in the cost petroleum and the profit petroleum. What are the GST issues? So petroleum classified into two categories, cost petroleum and profit petroleum. For your clarity, once again, I'm repeating once again, what is cost petroleum? Cost petroleum means, sir, the amount recovery of the cost incurred by the, sir, OEPC. That means out of 1 lakh liter of petroleum, if I sell 60,000 liter of petroleum, if I can recover whatever the cost I have incurred to that extent of petroleum extracted, we will call it as cost petroleum. Like our basically, sir, break-even point and the margin of safety. The break-even point is nothing but the cost petroleum. This is break-even point. And the profit petroleum is nothing but the margin of safety in costing language. Fantastic to the core. So the question arises, whether taxable in the hands of OEPC or minor is the question. Sir, everyone were having a doubt. If the minor or the OEPC is incurring various costs to dig that petroleum, for each and every cost, whether they are liable to pay tax on RCM or not is the question. Government clarified that, no. If you are incurring exploration cost, development cost, production cost, these costs you are not incurring for the government. These costs you are incurring for your own business, because if you incur this cost only, you can extract the petroleum. Once you extract the petroleum only, you can find out the cost petroleum. Once you find out the cost petroleum only, from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Sir, from that profit petroleum, as per the agreement what we have entered in PSC, you have to share us our share of profit, central government share of profit. For the balance is your share of profit. For that only this much drama you are playing. So, these are not supply made to government. These are self-supply. These costs like exploration cost, development cost, production cost, you have incurred for your business, not for our business. Not for our business. We have not provided any service to you to incur the exploration, development or production cost. But reality is something different. Because you got right to assign. You got right to assign the natural resources. So there is a supply from the government side. For that only, my dear lovable students, you are getting the consideration. So you paid the consideration as what? Royalty. Hello, sir. You paid the consideration as royalty. For that, you are liable to pay tax at RCM. But my dear lovable students, this exploration, development cost, production cost are incurred for the purpose of finding out the profit. These costs have been incurred for yourself, not for ourselves. So for this, you are not liable to pay GST. So that is the question with regard to cost petroleum, whether taxable in the hands of OEPC or minor, whether the OEPC or minor is liable to pay tax under RCM. No, sir. They have put a circular. That circular is saying that the relationship between the government and the OEPC are not partnership or partners. They are consignor-consignee, like licensor-licensee, like lessor-lessee. So there is no service to government. It is service to self. It is self-supply. So no GST liability for cost petroleum. So one line summary of the entire discussion is there is no GST liability for the cost petroleum. Now coming to the next one, man. Coming to the profit petroleum. Profit petroleum. What is profit petroleum? Profit petroleum is equal to total petroleum minus cost petroleum. From total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Fantastic to the core. So I will give you, central government have given the right to use to OEPC. Yes, sir. Sir, this central government can be called it as licensor and the OEPC can be called it as licensee. Actually, there is a supply of service because supply of goods means, sir, every kind of movable property, anything other than goods or services. So this is a supply of service. For this, the licensee is supposed to pay consideration to the licensor. That consideration will be paid in two forms. Number one, royalty. Number one is what? Royalty. This royalty is taxable in the hands of the OEPC. At RCM, there is no doubt about it. Even for the OEPC also accepted that, yes, there is a service provider. We are the service recipient. The service is right to assign. We got that services. For that, we are paying consideration as royalty. We are ready to pay tax at RCM. Fantastic to the core. But share in profit petroleum, as per the GST law, actually there is a supply of service. Yes, sir. Central government has provided the right to mine. Without that right, my dear lovable students, the OEPC cannot dig and find out the petroleum. For that, they specifically said that one part of the consideration you have to pay in cash by way of royalty and other by way of profit petroleum. We all know that definition of consideration. Consideration means consideration includes, consideration by, and consideration excludes. Consideration means payment in money or otherwise for the supply. Yes, profit petroleum is otherwise for the supply. So there is a supplier, there is a recipient, there is a consideration. As per section 7, subsection 1, clause A, my dear lovable students, supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Right, all the elements of supply has been satisfied. Actually, this is a supply. And for share of profit petroleum, tax has to be paid by the OEPC under RCM. But the issue is how to find out the profit petroleum is what the question. Sir, profit petroleum is equal to sale price of the total petroleum extracted minus the cost petroleum. Sir, how you will find out what are the elements of the cost petroleum? Surely for the miner or the OEPC, exploration cost will be form part of it. There is no doubt about it. For this element, there is no GST because this cost has not been incurred for the government. This cost has been incurred by the OEPC for the OEPC. So it's a self-supply, no GST. For development cost, yes, sir, this is also form part of cost petroleum. This has been incurred by the OEPC for the OEPC for their business. Sir, this is not a consideration paid by the OEPC for any services provided by government. So for this also there is no GST is there. Production cost also, my dear lovable students, has been incurred by the OEPC for extraction for their own business. It is not a consideration for any services provided by government, right? And royalty, but royalty has not been for the purpose of extraction. Royalty has been paid by the OEPC for getting the right from the government. So this is a consideration paid. Royalty is a consideration paid by the OEPC. There is no doubt about it. For the services provided by the government, it is a supply as per section 7, subsection 1, clause A. For that, as per section, RCM section, the business entity located in taxable territory is the person liable to pay tax at RCM. There is no doubt about it. You know one thing, this is a cost to the OEPC and this will form part of cost petroleum. Actually, from the profit petroleum, some portion of the share will be taken by the central government. Even that is also a cost. Even that is also a cost to the OEPC from the angle of OEPC. You think from the angle of OEPC? Yes, sir. That is also a cost. But what, sir? The Act of the Oil Act, not as per the GST Act, is saying that when you are calculating the profit petroleum, central government share of profit petroleum should not be included in the cost petroleum. Should not be included in the cost petroleum. Basically, they are saying that you should not calculate on an inclusive basis. You have to calculate on an exclusive basis. exclusive basis. That means this way, without including the central government share of profit petroleum, by including these four things, my dear lovable students, you have to find out the cost petroleum. So from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Profit petroleum classified in two categories: share of central government, share of OEPC. For the share of central government, actually, sir, GST is liable to be paid as per RCM. But OEPC made a representation to the central government that as per the Oil Act, you are not allowing us to include the central government share of the profit petroleum in the cost petroleum component. Hence, it is not, cannot be claimed as an expense by ourselves. You have to exclude us from paying GST on that. Government felt that yes, it's very reasonable. So government put a notification in 2018 called as 5/2018 saying that central government share of profit in profit petroleum is exempt from GST. No need to pay GST on this component. But for royalty, there is GST, my dear lovable students. There is no doubt about it. So one line summary of the entire discussion is central government will call for, do an auction, will take the highest bid, and will give that right to exploration to some business entity. For that business entity has to immediately pay some amount of royalty, which is fixed royalty, and they will start digging that. Once the commercial production starts, yes, if the case as one, there are oil or petroleum in that area, sir, whatever cost they have incurred to do that, to that extent petroleum, whatever recovering, they are called as cost petroleum. From the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. From that profit petroleum has to be shared between some share to central government and some share to the OEPC as per the agreement what they have entered. The question is, sir, actually three issues are there. Is GST liable for the cost petroleum? No, sir. GST, there is no need to pay GST on cost petroleum because those costs are incurred by OEPC for their business, not for any service has been provided by the central government. Point number one. Point number two, my dear lovable students, is, sir, on royalty, GST is liable to be paid? Yes, because that is not a consideration which has been incurred by the OEPC for themselves. That is a consideration paid by the OEPC for service which has been received from central government, which is assignment of natural resources. For that, OEPC is liable to pay tax at RCM. That is the second issue. For the third issue, for the profit petroleum, will the GST attracted? Yes, as per the GST provisions, it is a supply of service. Consideration is there. So it is a supply as per section 7, subsection 1. So GST has to be attracted. But central government, white notification number, sir, 5/2018 said that, my dear lovable students, sir, that is exempt from GST. With this background, read this English, you will be able to appreciate or understand. Concept, sir, recovery of exploration and production costs, that is called as cost petroleum. When an oil exploration and production contractor, oil exploration and production contractor, this guy is called as OEPC, oil exploration and production contractor, get license or lease to explore or mine the petroleum crude or natural gas from the government. It enters into PSC, that is production sharing contract with the government. So based upon PSC, the central government will enter into a contract with, sir, OEPC, oil exploration and production contractor. Fine. What is cost petroleum, sir? As per the PSC, which is profit sharing contract, production sharing contract, between the government and the oil exploration and production contractor, in case of commercial discovery of petroleum, yes, we found out the petroleum, the contractors are entitled to recover from the sale proceeds of all expenses incurred in exploration, development, production, and payment of royalty. This is what I have written here. Exploration, development, production, and royalty, my dear lovable students. Portion of value of petroleum which the contractor is entitled to take in an year for recovery of this contract cost is called as cost petroleum. So, if we dig 1 lakh liters of petroleum, out of that 1 lakh liter, if we sell 60,000 liter of petroleum, if the OEPC can recover the cost incurred to that amount of liter, we will call it as cost petroleum. Fantastic to the core. Coming to profit petroleum, which is nothing but total petroleum minus cost petroleum. Sir, further a total total value of petroleum produced and saved from the contract area in a particular period as reduced by cost petroleum is called as profit petroleum. So from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Perfect clear. GST by notification number 5 bar 2018. The government share of profit petroleum, as we all know that, sir, total petroleum minus cost petroleum is equal to profit petroleum. Profit petroleum has to be classified into two categories. Number one, share of central government and share of OEPC. Sir, this share, we are going to talk about this share, sir. The central, sir, government share of profit petroleum, which is consideration paid by the contractor to the central government for the service of grant of license, lease to explore or mine petroleum crude and natural gas is exempt from GST. Actually, this is also a consideration. There are two considerations are being paid by the OEPC. One consideration is royalty, which is a fixed sum. Next, additional consideration is profit, which is a variable sum because we don't know how much is the profit petroleum is going to come. So, for this profit petroleum, there is no GST is what, sir, exempted under notification number 5 bar 2018. Fantastic to the core. Now, the next issue, question arises, is cost petroleum is not a consideration for services to government and hence not taxable. Cost petroleum are the cost incurred by the OEPC for their own business. It is not a consideration for any services provided by the government. Hence, my dear lovable students, that cost petroleum is not a consideration. Hence, it is not liable to tax under RCM. The relationship of oil exploration and production contractor within the government is not that of partners. They are not, there is no partnership between the government and the OEPC. But that of licensor and licensor or lessor and licensee or lessee in terms of the petroleum and natural gas rules. Having acquired the right to explore, as an OEPC, I acquired the right to explore or exploit and sell petroleum in lieu of royalty and share in profit petroleum. Contractor carry out exploration and production of petroleum of themselves and not as a service to the government. Hence, cost petroleum is not a consideration for the services provided by the government to the OEPC. But inside that cost petroleum, royalty paid will be there. For that royalty, OEPC is liable to pay tax at RCM. There is no doubt about it. There is no exemption for that. Only for profit petroleum, we are having exemption. Model production sharing contract. Para 8.1 of model production sharing contract state that how we are having DTA, model tax convention, like that. If we are writing a contract between the central government and that OEPC, there are certain model conventions are there. State that subject to provisions of the PSC, the contractor shall have exclusive right to carry out petroleum operation to recover costs and expense as provided in this contract. What contract is saying that? It is the rights of the OEPC to recover the cost. That means still the cost petroleum, the OEPC is having right. The oil exploration and production contract all petroleum operation at their sole risk, cost and expense. It is a duty, responsibility of the OEPC to dig. If there is any loss, you have to bear the loss. If there is any profit, till whatever costs you have incurred, you can recover. The balance is called as profit petroleum. In that profit petroleum, central government needs share. That share will not be set at the end of the contract based upon, wow, super mining, then we will be asking 90%. No. Such cheating will not be there. In the start itself, they will say that if there is any profit petroleum, you have to share 50-50, 60-40, 40-60, like that. Hence, cost petroleum is not a consideration of service to government of India and thus not taxable per se. So, my dear lovable students, the second clarification. So, royalty is a consideration. That is the first clarification. Royalty is a consideration for the service provided by central government. Hence, royalty is liable to tax at RCM. Number two, cost petroleum is not a consideration for the government. It is a cost incurred by the OEPC for themselves. Hence, they are not liable to pay GST at RCM. Third clarification. Profit Petroleum actually satisfy all the conditions to be taxable because it's a supply under section 7 subsection 1 clause A. There is a consideration even though it is not in money, it is in form other than money. So my dear lovable students, all condition of taxability has been satisfied. But still, it has fallen under section 11. It has been exempted by government saying that the central government share of profit on the profit petroleum, for that the OEPC is not supposed to pay tax at RCM. But exception they have given. However, cost petroleum may be an indication of the value of mining or exploration service provided by operating member to the joint venture in a situation where the operating member is found to supply service to the oil exploration and production joint venture. For example, sir, 5 people are, there is a joint venture and there are 5 members to the joint venture. If one of the member is incurring cost on behalf of the joint venture, the cost petroleum may be an indication of the value of mining or exploration service provided by the operating member to the what venture? Joint venture. In a situation where operating member is found to be supplying service to the oil exploration and production joint venture. So if any, sir, cost petroleum has been incurred by the member of the joint venture, we can say that some other person has provided service to the joint venture. That will be covered under 7 subsection 1 clause AA. For that, GST will be levied. So what are the main takeaways from this notification and circular? Sir, take away number 1 is saying that royalty is a consideration paid by the OEPC for the services provided by the government. Sir, GST will be applicable at RCM. Number 2, cost petroleum are not the consideration paid by the OEPC for the service received from government. Those are the costs which has been incurred by the OEPC itself. Hence, no need to pay GST. Sir, for profit petroleum, actually GST is there because it satisfied all the condition, but because of notification issued under 5/2018, it is exempt from GST. Exempt from GST. These are the 3 main takeaways, my dear lovable students. I hope that you would have got a brilliant idea about the cost petroleum and profit petroleum. As you all know that we are doing computation of GST payable, which is the first 14-mark question for examination, mandatory question for examination. In that actually, we have solved nearly 8 questions of past examination. When we come to illustration number 9, which has been asked in November 2019, there were 1 adjustment. Adjustment number 9. He has been assigned the right to collect royalty on behalf of Maharashtra government as excess royalty collection contractor. He noticed that mining leaseholder have short paid rupees 2 lakh as IGST from what had been exempted to him under the assignment. So this is some adjustment which we should have a perfect background about ERCC, excess royalty collection contractor. Actually, without this background or prerequisite, you will not be able to answer this question. So I have already made 1 prerequisite, which is about cost petroleum. That is video number 1. Now I am doing video number 2 for ERCC. I will explain you what this ERCC, how this is working, and I will come to what is the exemption and what is the consequences, my dear lovable students. There are 2 characters are there in circumstance or the situation number 1, scene number 1. There are 2 characters are there. Number 1 is state government and number 2 is the mining leaseholder. Actually, there is a place or area where you can mine. This place is owned by state government. The state government is giving that mining rights to that mining leaseholder. For example, ANM Limited. Sir, this is a supply of service because we all know that what is the definition of supply of goods? Goods means anything, sir, which are of movable nature. anything other than goods or services. So providing mining rights by the state government to the mining leaseholder is a supply of services. So being a business entity located in taxable territory, A&M Limited received supply of services from state government. They are liable to pay tax at RCM. At RCM. For this mining leaseholder is liable to pay consideration to the state government. So what is the service number one? State government has provided a service which is, sir, mining right sharing service to a company. For this, the company who are situated in taxable territory is liable to pay tax on reverse charge basis. For this, they have to pay consideration. Two consideration has to be paid. One is fixed sum and additional sum. Sir, for this type of transaction, that fixed sum are technically called as dead rent, like sunk cost, like dead rent. Irrespective of the quantity mined, this dead rent needs to be paid by the recipient, that is A&M Limited. Sir, whether you dig, whether you mine 5,000 or 10,000 or 1 lakh or 20 lakh, sir, up to the level fixed by the government, you are mandatorily liable to be paid the dead rent. But, sir, the government is feeling that 10 lakh units you will mine. This is the minimum. But if you are mining more than 10 lakh, for example, 12 lakh units, if you are mining, for that extra 2 lakh unit, you are supposed to pay an additional amount called as additional royalty or excess royalty. Additional royalty or excess royalty. Assume the dead rent has been paid for 10 lakh unit, but actually you have mined 12 lakh unit. So extra units you have mined is 2 lakh unit. That for that extra unit mined, as per the terms of the contract, the recipient is liable to, sir, pay extra royalty called as excess royalty. Called as excess royalty. So my dear lovable students, I will give you a situation. Sir, state government is there. They have given the mining rights to A&M Limited for a units of 10 lakh. Assume that actually A&M Limited has mined 9 lakh unit. Then they are liable to, entitled to pay only the dead rent. They are not entitled to pay excess royalty. So assume that they have taken that for 100 crores. For this 100 crore, A&M Limited is liable to pay tax at RCM. Fantastic to the core. But if they actually mine, sir, 12 lakh units instead of 10 lakh unit, for that 10 lakh unit, already they have paid dead rent. For this extra units of 2 lakh, sir, some amount of royalty they have to pay. That is called as excess royalty. On that excess royalty, sir, GST has to be paid. So for this 100 crore, which is the dead rent, the recipient A&M Limited will pay tax on RCM. And also for the extra 2 lakh unit, whatever royalty coming, for that royalty also A&M Limited will pay RCM, sir, GST on an RCM basis. Fantastic to the core. So what is the transaction happening here? State government is giving the right to a company for the purpose of mining, called as mining leaseholder. And state government is saying that you can mine up to 10 lakh unit. If you are mining over and above the 10 lakh unit, for that extra unit, you are supposed to pay as extra royalty plus GST. But you tell me, practically will the A&M Limited or the mining leaseholder will disclose the real number? Because when they disclose the real number, if they really mined 12 lakhs or 13 lakhs or 15 lakhs, for that extra amount, they are supposed to pay extra royalty to the government along with the GST on reverse charge basis. So generally, every company will try to hide that, the actual amount of mining. But government has to keep on watching that company, how much they are mining. So to escape from that situation, what government will do, government will enter into a deal with some other company. For example, the state government will enter a contract with ERCC, Excess Royalty Collection Contractor. So the state government will assign the right to collect that excess royalty. Actually, that right is with the state government. State government is having the right to collect that excess royalty over and above 10 lakh unit. But that right has been granted by the state government to the ERCC. Even this is also a supply of services from state government. What, sir, state government is saying that to get this right, this ERCC has to pay some consideration. Assume 5 crore has to be paid. So ERCC should pay consideration. Actually, the service provider is state government and service recipient is ERCC. Sir, if this ERCC situated in taxable territory, then ERCC should pay tax at RCM. Should pay tax at RCM. Sir, what state government is saying that ERCC, you pay as in advance 5 crore. You take that right. We are happy. Why we are happy? Because, sir, we got 100 crores as the dead rent from the actual miner. And we are getting additionally 5 crore from the ERCC and we gave the right. Fine, fantastic to the court. Now ERCC is asking to the state government that this is a good land. Sir, I am expecting bumper mining. I think that 8 crore will be the excess royalty. So today I am paying you 5 crore. Sir, in future, I will be collecting 8 crore from the, sir, mine leaseholder. So I will be getting a profit of 3 crore. But I have to pay you 5 crore now. And I have to pay GST on that 5 crore as RCM. GST on that 5 crore as RCM. It is an additional burden for me. So government said that, sir, that GST on 5 crore is exempted. That GST on 5 crore is exempted. Now you read this. Service supplied by state government. So the service provider is state government. To excess royalty collection contractor, which is ERCC, excess royalty collection contractor, by way of assigning the right to collect royalty. Actually, who were having the right? The state government were having the right. That right has been given by the state government to ERCC. For that, ERCC has to pay some consideration, which is how much crore? 5 crore. On behalf of the state government. On the mineral dispatched by mining leaseholder are exempt from GST. Fantastic to the core. Now, the ERCC is very happy. ERCC has to pay 5 crore rupees consideration, get the right. He will start counting how much ton or how much unit is mined by the actual miner. If it crosses 10 lakh unit, now he is entitled to pay, sir, excess royalty. So on this 5 crore, GST is exempted. Now ERCC is very happy. But the state government is saying one additional condition. At the end of the mining period, for example, it may be for 1 year or 2 year or 3 year or 4 year or 5 year. Assume that the life of the mining period is how many years? 5 years. At the end of the 5th year, ERCC, you have to come forward and you are supposed to furnish a statement to the state government. Sir, the royalty paid by the ERCC is 5 crore. If the excess royalty collected is only 3 crore, that means, sir, when the actual mining happen, if it goes more than 10 lakh unit, then the leaseholder, this mining leaseholder is liable to pay excess royalty. What he will do, you know, for example, if he has actually, the actual output is 15 lakh unit, assume. So extra how many unit he has mined? 5 lakh. On this 5 lakh unit is liable to pay what royalty? Excess royalty. So for this excess royalty will be handed over to the ERCC because central government has given that right from their pocket to the ERCC and ERCC has paid some 5 crore rupees as consideration. So now central government does not have the right to collect what? Excess royalty. That excess ERCC will collect that amount. And for this excess royalty, GST will come. Because for the mining leaseholder, for him there is no transaction with the ERCC. Actually, state government and ERCC only having transaction. But the state government informed the mining leaseholder that if there is any excess royalty, instead of depositing with the government, please deposit that amount with the ERCC. But even on that excess royalty, GST is leviable. That GST you itself has to pay at RCM, that you don't give to the ERCC. So that excess royalty hand over to the ERCC, and GST on the excess royalty has to be paid by that mining leaseholder to the government. So now, at the end of the period, there are only two circumstances arises. ERCC has to file a statement to the government that, sir, assume that excess royalty collected is only 3 crore. Oh my God. That means ERCC has not studied that land or plot or site very well. Actually, for him, it's a business loss. Because he has paid 5 crore to get that right. But he was able to collect only 3 crore excess royalty from the mine holder. So, for this 3 crore, only the government would have got the GST. Because who would have paid GST for this 3 crore? The actual mine person, this guy would have paid, mining leaseholder would have paid GST for the 3 crore to the government. But government allowed exemption for 5 crore. Now government is asking that, why we have to provide you the exemption? We provided you the exemption with an assumption that we will be getting GST more than this 5 crore. Whether it's a profit or loss for you, it's your headache. That is not our consideration. So, if the amount collected by the ERCC is only 3 crore, the GST exempted on 5 crore. But the government got the GST only on 3 crore because only that amount is excess royalty. On that 3 crore would have been paid by the mining leaseholder to the ERCC. And for that 3 crore, that mining leaseholder would have paid GST to the government. So there is a shortfall of 2 crore. Now, sir, ERCC has enjoyed extra exemption to the extent of 2 crore. Sir, GST on 2 crore, ERCC should compensate now. Sir, scenario number 2, positive scenario. ERCC got the right by getting 5 crore rupees, but ERCC collected 8 crore. Wow. That means it's a bumper mining. That means, sir, this guy, that is mining leaseholder, would have paid 8 crore to the ERCC. As per the contract, is supposed to pay, sir, extra royalty. And on that 8 crores, he would have paid GST at RCM. Government is happy. ERCC is happy because government got GST on 8 crore. So government collected GST on 8 crore, but they provided exemption to the ERCC only to the tune of 5 crore. There is no shortfall 3 crore. Then no additional liability for ERCC. So, I'm reading this once again. Sir, services supplied by a state government to ERCC. So, service provider is state government and service recipient is ERCC. What service they provided? Assignment of right to collect royalty on behalf of the state government. On the mineral dispatched by mining leaseholders are exempt from GST. Sir, with 2 conditions, sir. There are 2 conditions are there. Condition number 1, at the end of the contract period, it may be 1 year, 2 year, 3 year or 5 year, ERCC shall submit an account to the state government. ERCC should furnish a statement to the state government and certify that the amount of GST deposited by the mining leaseholder on royalty is more than the GST exempted on services provided by state government to the ERCC of assignment to right to collect royalty. For example, sir, second example, ERCC has paid really 5 crore. Actually, for this 5 crore, ERCC is liable to pay tax at RCM, but that is exempted as per the above mentioned notification. ERCC should prove to the state government that actually I got 8 crore, so there is a profit of 3 crore, you got GST on 8 crore, then the GST collected is more. The exemption is less. Hence, I don't have any extra liability. This is situation number 2. But where such amount of GST paid by mining leaseholder is less than the amount of GST exempted. GST exempted on 5 crore, but the mining leaseholder paid GST only on 2 crore. There is a short of, 3 crore. There is a short of 2 crore. Exemption shall be restricted to such amount as is equal to the amount of GST paid by the mining leaseholder. Mining leaseholder have paid only GST to the tune of 3 crore. But exemption already enjoyed is 5 crore. That 5 crore will be restricted in future. That means there is a short of 2 crore and the ERCC shall pay the difference between GST exempted on the service provided by state government, which is GST exempted will be, for example, 5 crore into 18%, some amount you will be getting, to the ERCC of assignment of right to collect royalty, and GST paid by the mining leaseholder on royalty, which will be 3 crore into 18%. Only to this extent exemption will be available. The differential GST should be paid by the ERCC at the end of the contract period. At the end of the contract period. Sir, who is mining leaseholder, sir? Mining leaseholder means a person who has been granted mining lease, quarry lease, or license or other mineral concession under the Mines and Minerals Development and Regulation 1957, and rules made thereunder, or the rules made by state government under 15 subsection 1 of the Mines and Minerals Development and Regulation Act. What a concept this is. Now you read this adjustment. He has been assigned, that means ERCC has been assigned right to collect royalty on behalf of Maharashtra government, state government, as excess royalty collection contractor. Fine. For that, this ERCC is entitled or liable to pay some consideration. My dear lovable students, that is exempt from GST with the futuristic condition. ERCC in future should submit a statement to the central government and prove to the, state government and prove to the state government that the GST collected is more than the GST exempted. Then there is no liability. But the GST exemption is more, then the differential amount ERCC is liable to pay tax. He noticed that mining leaseholder has short paid 2 lakh as IGST from what had been exempted to him under the assignment. So there is a short paid of 2 lakh IGST. Now this 2 lakh IGST should be added to the output tax liability of this ERCC, because whatever difference is there, my dear lovable students, has to be, paid by the ERCC. So assignment of right to collect royalty 2 lakh should be added to the output tax liability. Sir, this is the inward supply under RCM. First, he has to pay under RCM assignment by state government of the right to collect royalty from mining leaseholder to the extent the exemption is not available. Now, for the shortfall, 2 lakh rupees GST should be paid by the ERCC from his pocket on RCM. Since he is paying from his pocket on RCM, he can take that as ITC. That's why in total computation table also that 2 lakh has been added. So one line summary of the entire discussion is, the state government will enter into 2 contracts. Basically, one with, MLH, that is mining leaseholder. For that, he has to pay 2 consideration actually. One is fixed sum dead rent. For that, he himself will pay the GST on RCM. And whenever he crosses a threshold limit, like they'll be keeping as per the contract, if you are digging till that 10 lakh units, we don't have any problem. But if you are digging more than 10 lakh units, you are supposed to pay as excess royalty. On that excess royalty also, you are supposed to pay GST on RCM. Sir, on both the MLH only will pay tax at RCM. But the government always has to see like this when they are, their threshold limit is, extending. My dear lovable students, it is impracticable for the state government and also for the MLH. They won't show proper accounts. So, for that purpose, the state government is entering a contract with some other person called as ERCC. To that ERCC, state government is saying that actually we have the right to collect the excess royalty, but if you are paying upfront amount, you can take that right. For that, ERCC is paying 5 crore rupees. And ERCC is asking that, now 5 crore rupees I have paid to you. Sir, you got already dead rent and 5 crore. Now I have to pay GST at 18% at RCM means My working capital will get affected. So state government said that no problem, sir, this service is exempted from GST. You start collecting the excess royalty from the MLC. Fantastic to the core. If the additional extra royalty collected by you is more than the, sir, amount what you have get, then no issue at all, my dear lovable students. But if that amount is less, we will get only less royalty. You will get only less royalty. On that less royalty, we will get only less GST. Then you will claim more exemption. That we will not allow. So in future, you have to come and prove to us that the GST collected by the government is more and exemption is less. If the exemption is more than the GST collected, for that differential amount, you have to compensate us in future based on that futuristic condition. Only on that 5 crore, we are giving exemption. What a beautiful exemption, my dear lovable students. Many of the students feel this as very technical. I hope that you have a fantastic and wonderful understanding with regard to ERCC now. If that is the case, inform me in the comments, sir, how much you have enjoyed this topic. Sir, 2 background has been added. One is cost petroleum and profit petroleum, and number 2 as prerequisite, which is ERCC. Sir, after this prerequisite, I will be solving this illustration without the prerequisites or background, my dear lovable students. Sir, as you all know that we are doing computation of GST payable. In that process, actually, we are stuck in illustration number 9. Because illustration number 9, adjustment specifically discussing about cost petroleum and profit petroleum. Without knowing what is cost petroleum and profit petroleum and its relevant circular, we can't do this question. That's why I've done a separate video on cost petroleum and profit petroleum. When we come down, we are having another adjustment called as ERCC. Sir, services provided by state government to the ERCC by way of assignment of right to collect the excess royalties exempt from GST. Sir, but that exemption is having a restriction or condition, which is a futuristic condition. That futuristic condition has been tested in this question. That's why I have done prerequisite number 2 to solve this question. Now, in order to solve this question, one more prerequisite is needed. I'll be reading, man. Sukhdev, being an operating member in mining and exploration services at High, has provided certain services to the joint venture in which he also a participant. He believes that consideration received from the joint venture is cost petroleum and not taxable. This is what adjustment number 1. As we all know that in order to attract GST, first an activity or transaction should become a supply. We are having only 4 sections are there. Section 7, subsection 1, clause A. Supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. As per section 7, subsection 1, clause AA, activity or transaction by any person other than an individual to its members, constituents or vice versa for cash, defer payment or other valuable consideration is a supply. So my dear lovable students, there is a joint venture and sir, there is members to the joint venture. So there is a joint venture and this joint venture is having member number 1, member number 2, member number 3. If any service has been provided by joint venture to the member or member to the joint venture, this will amount to supply under section 7, subsection 1, clause AA or not is a question to be answered. Because all the conditions which are stipulated by 7, subsection 1, clause AA are satisfying. Like activity or transaction by a person. Yes, sir. Joint venture is a person because it's an association of person or body of individual. To its members, constituents or vice versa for cash, defer payment or other valuable consideration is a supply. So the question to be answered is, if joint venture provided any service to its members, will it amount to supply or not? If member provided any service venture, will it amount to supply or not? This has been clarified by circular number 35 bar 2018 on 5/3/2018. So, as a background for this Sukhdev question, I am solving the third background video. Then I will be solving the main question. I can promise you that there is no more background video because you have to get a fantastic understanding of cost petroleum and profit petroleum. And number two is the concept of ERCC. And the third one, JV agreement. Taxable services provided by members of the joint venture to the joint venture and vice versa, intercede between the members of joint venture. That is the clarification given by the department by way of circular. What they are saying is, if the service has been provided by the JV to the member or member to the JV, will it amount to supply or not, is what the clarification given. What is joint venture first? What is joint venture? Joint venture is an unincorporated temporary association, like association of persons or body of individual, constituted for the limited purpose of carrying out a specific project within a specific time frame. A comprehensive examination of various JV agreement hold the key to understanding of the taxation of transaction involving taxable service between the JV and its members or inter se between the member of the JV. So how the circular is starting is that, sir, joint venture means an unincorporated temporary association constituted for the limited purpose of carrying out a specified project. We can't, every joint venture, we can't say that any services provided by the joint venture to the member or member to the joint venture is taxable. First of all, the circular is starting with a wording that we have to read every joint venture and we have to understand what are the terms and conditions of the joint venture. Then only we can say that whether services provided by the joint venture to the members or members to the joint venture will tantamount to supply or not. First, understand the joint venture. So, joint venture being an unincorporated temporary association constituted for the limited purpose of carrying out specified project within a time frame, a comprehensive examination of various JV adjustment hold the key to understand of the taxation of transaction involving taxable service between the JV, that means one JV to another JV, and its members, between the members, or inter se between the members of a JV. So in order to say whether the transaction is going to be taxable or not, we have to understand the JV. Number two, so the circular is giving you a solution. Supply of services by JV to members. JV is providing some service to members regarded as supply, so they are finalized. Supply of services by an unincorporated association or body of person to a member thereof for cash, defer payment or other valuable consideration shall be treated as supply of service. That means if any service has been provided by JV to its members as per section 7 subsection 1 clause AA, any activity or transaction other than a individual to its members, constituents or vice versa should be treated as supply. So circular clarified that. Now circular is taking some supporting. So the above entry in schedule 2 is analogous to and draws strength from the provisions of Article 366 of the Constitution, according to which a tax on sale or purchase of goods includes a tax on supply of goods by any unincorporated association or body of person to a member thereof for cash, defer payment or other valuable consideration. When this circular was coming in 2018, my dear lovable students, when you check schedule 2, this was one of the item, but now they have removed this item from the schedule 2 and then only they incorporated 7 subsection 1 clause AA, because everyone were having a doubt that, my dear lovable students, whether services provided by sir AOP or BOI to its members, whether it is taxable or not. Yes, this item was separately included in Schedule 2 earlier, but now this has been removed. Then only they have added 7 subsection 1 clause AA. It was a new addition. Fine, fantastic to the core. So earlier when this act come, they were supported this. Now, supply between joint venture and members or members inter se liable to GST. So here what clarification they have given is, if any service has been provided by the joint venture to its members, should be treated as supply as per section 7 subsection 1 clause AA. Now question arises, what is a reverse, sir? Given that reverse also liable to GST. Service supplied by members of unincorporated JV to the JV or the other members of the JV or by JV to the members for a consideration are liable to GST. Are liable to GST. So they have clarified that if any service has been provided by JV to its members should be treated as supply, and any service has been provided by the members of the JV to the JV should be treated as supply and it should be liable to tax. Now, one new concept, cash call or capital. Is it a mere flow of money taxable if by way of advance towards supply? So they are particularly clarifying one situation called as cash call. Cash call in the sense means cash calls are raised by the operating member of the JV. For example, in a joint venture, 5 members are there. Member 1, 2, 3, 4, 5. For example, member 3 is the person who are operating that JV. On the other member, in proportion to their participation interest in their JV, unincorporated to meet the expenditure of the operation to be carried out as per the approval work program and budget. My dear lovable students, for example, we are 5 people are entering into JV. We are going to do a particular business or particular job. Sir, member number 3 is going to undertake the JV operation. Then such a person is called as operating member. Sir, to run the JV business, for example, 100 crores is needed. 5 people are there. From every member, this operating member will collect 20 crore. It is called as what called cash call. He will call for cash. Give me cash. 20 crore, 20 crore, 20 crore, 20 crore, 20 crore. We'll put 100 crore and we will do the next step of the joint venture. Sir, whether that is taxable or not is a question. Sir, payment out of cash call for supplies are liable to GST. Sir, payment made out of cash call a joint venture towards taxable services received from a member or a third party is in the nature of consideration and hence attract GST. What a clarification. What they are saying is, when you are collecting this 20 crore, 20 crore, 20 crore, 20 crore, 20 crore from the members of the JV to the JV, this is just a capital contribution. Both definition of goods and services excludes money. Hence, my dear lovable students, you are not supposed to pay GST on that. But now the money is available with the JV. From this money, if JV is paying to member or to any other outsider to get a service, it will become consideration. Once it becomes consideration, it is liable to GST. We'll give you 2 examples, man. Taxability of cash call can be further explained by the following. Example number 1. There are 4 members in a JV, joint venture, including the operating member. That means one of the member is an operating member. And each one contribute rupees 100 as a part of their share. A total amount of rupees 400 is collected because 100 rupees everyone is going to give 100, 100, 100, 100, 400 rupees. The operating member purchases machinery for 400 for the JV to be used in oil production. That means the operating member is going to buy a machine by giving this 400. Sir, it will not be subject matter of GST for the reason that operating member is not carrying an activity for a consideration. That means that 400, receipt of 400 by the JV will not be subject to GST because that is just a cash call, that is just a capital contribution. Conclusion, money paid for purchase of machinery is merely nature of capital contribution and therefore It's a transaction in money. Sir, for that machinery, GST is there. I'm not saying that for that machinery that GST is taxable or exempted. That itself is not the issue. The issue is, my dear lovable students, when the members of the JV is contributing to the JV, if it is by way of cash call, that is by way of capital contribution, then it will not be taxable. Sir, example number 2, this will give double, triple clarity. There are 4 members in JV, including the operating member, and each one contribute rupees 100 as a part of their share. A total amount of 400 is collected. So totally 400 rupees collected. Operating member thereafter uses its own machine. Operating member uses their machine for the JV. So service provider is operating member and service recipient is JV. For that, JV is supposed to pay consideration to the operating member and perform exploration and production activity on behalf of the JV. The operating member uses its own machinery and is thereof, therefore, providing service within the scope of CGST Act. This is because in this scenario, the operating member is recovering the cost appropriated towards machinery and services from other JV members in their participating interest ratio. So this will amount to supply. So operating member, he himself using their own machinery, for that the JV is supposed to pay the consideration. If that consideration is collected from the other members of the JV, that is a consideration for the supply provided by the operating member to the JV. This is what has been written here. Cash calls are raised by operating member of the joint venture on other member in proportion to their participating interest in the joint venture to meet the expenditure on the operations to be carried out as per the approval, work program and budget. That means if the JV is collecting the cash call as a capital contribution, it will not be treated as supply. But if the cash call has been called by the operating member for a consideration for any services provided by the operating member to the JV, it will be treated as supply, is what the clarification is saying. With this circular background, now you read the first part, the clarity will be very relevant. Sukhdev being an operating member in mining and exploration services at Mumbai High. So they have put into a JV, joint venture for exploration. In that, Sukhdev is one of the operating member. Fine, fantastic to the core. Has provided certain services to the joint venture. Fine. So just now we studied that if any member has provided services to JV, it should be treated as supply and it is liable to GST, in which he is also a participant. Fine, he is one of the member, he is also a participant. So service provider is Sukhdev and service recipient is joint venture. For that, Sukhdev is going to get some consideration. He believes that consideration received from JV is cost petroleum and not taxable. Sir, cost petroleum is applicable to the joint venture, not to the Sukhdev. Because for the joint venture, from the total petroleum, if they reduce the cost petroleum, they will get the profit petroleum. For Sukhdev, whatever services he has provided to the joint venture, it will fall under section 7, subsection 1, clause AA. Sir, services provided by any activities or transaction by any person other than an individual to its members, or sir, vice versa, should be treated as supply. So for this 12 lakh, this is not a part of cost petroleum. If you are having any doubt in cost petroleum, I've explained a specific video on cost petroleum. Sir, these are the 3 prerequisite to understand this question. So what they are saying, consideration for service provided as an operating member to the JV. That's the issue. The operating member is providing the mining and exploration services to the joint venture. That means here the service provider is the Sukhdev. He is a member of joint venture. He provided services to joint venture. this is a supply under section 7 subsection 1 clause AA, which has been clarified by government through notification to the joint venture, and thus the consideration received therefore is not cost petroleum. Cost petroleum is applicable to the JV. Cost petroleum is not applicable to the member who have provided services to the JV and hence liable to tax. So for this 12 lakh, my dear lovable students, he has supposed to collect CGST, sir, 1,08,000 and SGST 1,08,000. Actually, before I solve this question, I have done 3 prerequisite video. One is video number 3 is JV, sir, circular based on joint venture. And one video I have done, this is cost petroleum, video number 1 on cost petroleum. And also I have talked a video on, sir, ERCC, sir, excess royalty collection contractor. This is my video number 3. Once you see all the video, and this is the 3rd video, once you see all the video, then in the coming slot, I will be completing question number, sir, 9, which is Sukhdev is a minor engineer question without giving any background for this. I believe that you have understood the JV circular in a very well way. If it is a new information or if you have understood very well, I'm going to illustration number 9. A very important question for examination, sir, because 3 main concepts are talking in this illustration. Before you do this, we should have the fantastic idea of, sir, what is cost petroleum, and number 2, what is the joint venture, transaction of joint venture, and also about the ERCC, excess royalty collection contractor. So first we will understand what is cost petroleum, then we will understand what is ERCC, and then we will understand JV, then we have to solve this question. I hope that you are having a fantastic understanding of cost petroleum, joint venture, and also ERCC. With that background, we are going to solve this illustration number 9. Sukhdev is a mining engineer. What engineer? He has crossed the threshold limit for registration under the GST law and is duly registered in the state of Maharashtra. He effects the following transaction in the month of March and wants you to compute the tax payable in cash. He has filed the bond or LUT to claim benefit of zero rated supply. Following are the particulars furnished by him. Sukhdev, being an operating member in mining and exploration services at Mumbai High, has provided services to the joint venture in which he is also a participant. As per the circular issued, which we have recently discussed, my dear lovable students, any services provided by the member of the what venture? Joint venture. To the joint venture will be treated as supply of service. Will be treated as? That will be liable to GST. So he believes that consideration received from joint venture is cost petroleum and not taxable. No, sir. That is not cost petroleum. Cost petroleum is applicable to the joint venture, not to the member of the joint venture. Hence, this 12 lakh is liable to what? GST. So, my dear lovable students, consideration for service provider as an operating member to the joint venture. The operating member is providing the mining and exploration services to the joint venture, and thus the consideration received therefore is not what? Petroleum, and hence liable to tax. So for this 12 lakh, you are supposed to collect CGST at 9 and 9%. So 12 lakh into 9%, 1,08,000, and 12 lakh into 9% comes to 1,08,000 of SGST. There is no IGST. So what is the first understanding of the first point? If any service has been provided by the member of the joint venture to the joint venture, will be treated as supply of service and will be liable to, it is not a dash petroleum, cost petroleum. Coming to the next one. He has purchased certain machinery from outside the state, that means interstate, to render services to JV at the Mumbai High. Sir, this is the consideration received. If this consideration is subject to GST means Sir, in order to provide that supply, he has purchased the capital goods. For that capital goods, he would have paid certain GST that can be taken as what? ITC. So on this 6 lakh, he would have paid IGST at the rate of how much percent? 18 percentage. So 6 lakhs into how much percent? 18 percentage comes to how much? 1 lakh 8,000 can be taken as what? ITC. So in the ITC calculation table, man, if you see interstate purchase of machinery, what is the value of machine? 6 lakhs. 6 lakhs. What is the rate? You have to read the rate. Supply value is what of taxes? Exclusive of taxes. Supply of services are taxable at CGST how much percent? 9 percentage. SGST 9% and IGST. And supply of goods are taxable at CGST 2.5 percentage, SGST 2.5% and IGST 5%. Is this goods or services? So he would have paid IGST of 5 percentage. That IGST can be taken as, that means, my dear lovable students, 6 lakh into 5 percentage comes to 30,000 can be claimed as IGST credit. Comfortable, sir? Coming to the next adjustment, sir, he has obtained legal opinion. That means he has received legal services. We all know that legal services are RCM from a local firm of advocate to enter into a contract within the JV for providing services to it. Before he enter into the JV contract, he has got a legal services from an advocate. For this, he is liable to pay on RCM. Is this goods or services? Services. For services, sir, what is the rate available? 18 percentage. Sir, he has obtained legal opinion from a local firm of advocate. Local. So 9% CGST and 9%. So first, this has to be included in the RCM list. And this can also be taken as what? So in two places, it should be reflected, my dear lovable students. So first, in the inward supply under RCM list, legal services provided by a firm of advocate to Sukhdev, that is what entity? 1 lakh. On this, 9,000 and 9,000 has to be paid it as RCM. And this can be taken as what also? So legal services 1 lakh into 9,000 and 9,000 can be taken as, fantastic to the core. Coming to the next one, man. Sir, he has obtained accommodation from state government to locate his office close to the what? Seashore. That means renting of immovable property by the state government. Again, that is also what? RCM. So is this supply of goods or supply of services? So you have to include the calculation in two places. Number one, RCM calculation and also in the ITC calculation. So 2 lakh into how much percent? 9% CGST and 9% SGST. So in the RCM calculation, renting of immovable property provided by state government to Sukhdev, a registered person, 2 lakh. So 9% 18,000 and 9% 18,000. And this can be taken as ITC. So renting of immovable property value is 2 lakh. 18,000 and 18,000 can be taken as what? ITC. Comfortable, sir? The next point, man, fantastic to the core. Point number 5. He gets a portion of the petroleum silt as a part of compensation while exploring the profit petroleum reserves in the Bombay High, which was as per the contract with the government is a part of what petroleum? Cost petroleum. Sir, in the notification issued by government, they specifically said that cost petroleum are not liable to GST. Cost petroleum are not liable to GST. And profit petroleum are exempt from GST. So, this consideration of how much lakh? 6 lakh. Since it has been specifically mentioned that this is a what petroleum, this will not be subject to. So, compensation received in the form of what? Silt, petroleum silt, which as per the contract with the government is part of what petroleum? Cost petroleum is not a consideration for service to the what? Government. and thus is not taxable. So 6 lakh, nothing will be taxable. That's what we have discussed in detail about the cost petroleum and profit petroleum. Fantastic to the core. I'm coming to point number 6. He sells the petroleum silt to a SEZ developer in Mumbai. How much? 6,80,000. That petroleum silt has been sold to an SEZ. It's a zero rated supply. Sir, this is a part of HP man. High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. Even though this is a part of HP man, even for exempt supply, if it is a zero rated supply, you are entitled to take ITC. Exempt supply definition includes our non-taxable supply. This is a non-taxable supply. Even though this is an exempt supply, you are entitled to take ITC. That means, my dear lovable students, for this 6,80,000, you are not entitled to collect any output tax because this is a dash rated supply. So sale of petroleum silt to an SEZ developer, supply to SEZ developer is a zero rated supply, and no tax is payable on the same if it is made under what or what. To highlight this only, my dear lovable students, the question said that yes, filed bond or LUT to claim benefit from what rated supply. And even though this is an exempt supply, which is a non-taxable supply, consequences of apportionment will not come, because even though the zero rated supply or exempt supply, the assessee is entitled to claim the full ITC. Are you ready with me? Yes, sir. Sir, the next one, the next point. Sir, consideration is received towards transfer of what right, which according to Sukhdev is not liable to GST as it has suffered what duty. There is no such provision in the entire exemption under section 11 of the CGST Act or section 6 of the IGST Act. Hence this 6 lakh, hence this 8 lakh should be subject to what? GST. So, sir, consideration for transfer of tenancy right, transfer of tenancy right to a new tenant against consideration in the form of tenancy premium is taxable even though stamp duty value has been paid. So for that 8 lakh, you are supposed to collect CGST and SGST. On violation of the terms in production sharing agreement, just now I discussed in the notification that PSA, sir, production sharing agreement, Sukhdev has paid liquidated damages to the government. So the government has provided fine, sir, has provided the tolerating an act. For that tolerating an act, the recipient has paid fine or liquidated damages. That is exempt from what? There is a specific exemption in Sarkar, service provided by the government by way of, sir, non-performing, sir, tolerating the non-performing of an act for which the consideration has been paid by way of fine or liquidated damages are exempt from. Since it is exempted, no need to collect what? Any output tax. Comfortable, sir? So as, not this one. That's it. They have mentioned, nowhere mentioned RCM. Payment of liquidated damages to the government. Services provided by government by of tolerating non-performance of contract for which consideration in the form of liquidated damages payable to the government on such contract is what? Hence, no tax will be payable by Sukhdev on such input tax. Since it is exempted, RCM provision will not be. That's why they have added in the output tax. Output tax, they have put a dash. Now, coming to the next one, next adjustment. He has been assigned right to collect royalty on behalf of Maharashtra government. Excess royalty collection contractor. Service provided by state government to by way of assignment of right to collect the excess royalty are exempt from. But in future, he has to ensure to the government that the GST collected by the government is more than the GST exempted. Just now we discussed about the ERCC notification. He noticed that mining leaseholder have short paid how much lakhs of IGST from what had been exempted to him under the assignment. That means, my dear lovable students, This 2 lakh should be paid by the ERCC by way of adding to his output tax liability. Are you all really with me? That too under what? RCM. Assignment by the state government of the right to collect royalty from mining leaseholder to the extent exemption is not available 2 lakh. Since he is paying this 2 lakh as what RCM, he can take it as what? ITC. So assignment of right to collect royalty 2 lakh should be added to the ITC available. Brilliant to the core. He has sold self-fabricated machinery through his agent in Mumbai. That he has been used for how many years? 2 years. The value of which is not available in the open market. Sir, the agent sells like, kind and quality to an unrelated customer in Mumbai. How much lakh? 10 lakh. Here, valuation rule you should know. Rule number 27, consideration not wholly in money. Rule number 28, supply of goods or services or both between related or distinct person other than agent. Rule number 29, supply between agent. If the supplies are made or through an agent, the value of supply will be either open market value or 90% of the like, kind and quality which the agent has sold to the ultimate customer. What is the value they have given? 10 lakh. Since the value is not available, sale of self-fabricated machine. Since open market value of the machine is not available, value will be 90% of the price charged for the supply of machine by the agent to his unrelated customer. So from 10 lakh, sir, 90% of 10 lakh is how much lakh? On that, 9% CGST and 9% SGST, 22,500. Opening balance of brought forward tax credit as electronic cash ledger 12,000, and you are having CGST credit, SGST credit and IGST credit. First you have to knock off the IGST credit, then you have to knock off the CGST credit, then you have to knock off the supply of value. Already be read. Provide suitable notes where required. If you, sir, see now, every adjustment of this question has been solved. So the CGST collected is 2,02,500 and here also 2,02,500. There is no IGST collected, my dear lovable students. For the receipt of services, you are supposed to pay 27,000 as CGST as RCM, 27,000 as CGST as RCM, SGST as RCM, and 2 lakh as IGST as what? And this can be taken as, already we have taken in the ITC computation table. Already we were having CGST, SGST and IGST opening credit also. So the total ITC available will be 45,000, 39,000 and 2,90,000. Since the goods and services are used for effecting what supply, including zero rated supply, full ITC thereon will be allowed. That means, sir, the apportionment concept will not be. ITC may be availed for making what rated supply. Even if such a supply is a what supply? Sale of petroleum silt being a dash taxable supply is a dash supply, because we have already studied that exempt supply include, but since it is also a what rated supply, ITC can be availed for making such supply. Now I am going to compute the tax payable in cash. Total tax liability on outward supply. We already calculated output tax collected 2,02,500, 2,02,500 and dash. First, we have to knock off the what credit? IGST credit. 2,90,000 IGST is there, right? There is no IGST payable at all. You can set off that IGST credit in any manner and in what proportion. So, sir, here, what is the total credit available? 2,90,000. So, 2,90,000, they have apportioned between 1,26,500 and 1,63,000. You can knock off in any manner. So, 1,26,500 plus, sir, 1,63,500 comes to totally 2,90,000. Why, sir? Why that like that? Nothing, man. Sir, what is the SGST credit available? 30. That if you knock off 39,000 from 2,02,500, if you reduce how much? 39,000. 2,02,500 minus 39,000, you will get how much balance? 1,63,500 payable. This they have knock off from the IGST credit. Balance they have, sir, knock it off against the. So IGST credit, IGST only credit is there. They made IGST credit 0. And SGST payable also become what? 0. Hello, sir. And CGST payable is 2,02,500. But the balance IGST credit available is only 1,26,500. So still how much payable? 76,000 payable. What we are having credit of how much? 45,000. So 76,000 minus 45,000, still how much payable? This is the forward charge liability, outward supply payable in cash after set off of what? ITC. I have just set off the ITC. I've just set off the ITC. Now I have to add the what charge liability, because this I have to pay from my pocket through the electronic what ledger, and this I have already taken as what? So reverse charge liability payable in cash without set off of ITC, tax payable under reverse charge being not an output tax cannot be set off against what? ITC, and this will have to be paid in cash. 27,000, 27,000 and 2 lakh, which we have already there of ITC table total, RCM table total. So 27,000, 27,000 and 2 lakh. Then my dear lovable students, I will get the total what liability? Tax liability, which is the first one is forward charge liability, and number 2 is what? Reverse charge liability. The total liability I will get. Are you all really with me? Total liability payable in cash. Since 12,000 CGST is available in electronic what ledger, this adjustment normally will not be available in any other question. Generally, they will give the balance available in electronic what ledger only. But this is a question different from the other question where you are having balance available in as opening balance, additional 46,000 CGST need to be what in cash, paid in cash. Because totally I am getting, sir, 58,000. Because FCM 31,000, RCM 20. So 31,000 plus 27,000 comes to is the total. Hello, sir. And sir, FCM plus RCM 27,000 plus sir 0 comes to 27,000. Here already 0 IGST payable. 0 plus 2 lakhs comes to how much? 2 lakhs. Right? So I am having 12,000 rupees balance in electronic what ledger? Cash ledger. So 58,000 minus 12,000 comes to how much? 46,000 is the net what payable? CGST payable. What electronic cash ledger, in which minor column? In which column we are having the credit? CGST column. The balance is available in the question as what, man? Electronic cash ledger CGST is 12,000. That's why that 12,000 I am knocking off against the CGST payable. That's why they are saying net CGST 46,000 should be paid. Comfortable, sir? So, payment to liquidated damages, RCM will not be applicable. If RCM was applicable, there itself I would have added and I would have taken as what? ITC. This just as a presentation purpose I'm putting, and I'm putting a dash. In terms of section 49B of the CGST Act, full 100% IGST credit of 2,90,000 must be utilized first before using CGST and what credit. However, the said IGST credit can be set off against the CGST and IGST liability in any order or in any. So that's the final answer. In each case would vary. If it is assumed that the value of 10 lakh at which the agent sells the self-fabricated machinery to unrelated customer is known to Sukhdev at the time he sell the machinery to the agent, that assumption we took. That means when Sukhdev is selling the goods to his agent, the agent is selling to an unrelated person at how much lakh? 10 lakh. This information is available to the Sukhdev. That's why Sukhdev has taken 90% of the value charged by the agent to his unrelated. And it has been assumed that supplier has opted to value the goods at how much percent of the value charged by agent to his what customer. It has been assumed that aggregate turnover of Sukhdev in the financial year exceeds how much lakh? 20 lakh. Because he has received legal services. In legal services, there is a specific exemption saying that threshold limit exemption, Sir, this exemption, this RCM will not be applicable. Hello, sir. If the recipient whose turnover in the immediately preceding previous year does not exceed the threshold limit for registration, then that service will be exempted. If that service is exempted, there is no question of what at all. Look at the question, man. Brilliant question. Just to solve the Sukhdev, we have understood what is cost petroleum, what is ERCC concept, and also what is the clarification with regard to the JV. So with this, we can say that we are through with part 3. A brilliant 3 questions, my dear lovable students. I believe that you are having a fantastic grip. If that is the case, update me in the comments. We'll be update you the next part number 4, which is illustration number 10, 11, and 12. Till that, thank you. Bye-bye from me.